Good morning, everyone. This is Dave, aka DREBG. Today is Tuesday, May 11th, 2010. It's 8:15 in the morning, and I'm going to talk about gap trades today. What you're looking at is the euro-dollar pair from yesterday. These are some trades that I took. It was an exceptional day, and I will be the first to admit this. This is not typical. It just went phenomenally well, and I just want to make it clear that this is not something that happens all the time. First thing to look at is this purple area right in the middle of the screen. This is the gap. There was a gap over the weekend. Friday's close was here, way down on the left, and Monday's open was up here. There's a gap. Well, if you look prior to this, prior to that Friday close, you'll see that the market is in an uptrend. An easiest way to tell what the trend is, you look at the screen, and if it's lower on the left-hand side and higher on the right-hand side of your screen, it's in an uptrend. If it's higher on the left-hand side and lower on the right-hand side of the screen, it's in a downtrend. I know it's a little too simplistic, but honestly, ask your 6-year-old, and I bet they can tell you what type of trend it is. The point is, when we're in an uptrend and then we have a gap up, this is what we call a novice gap. What we mean by novice is the novices are jumping in and saying, wow, this thing's going up, I'm going to hop in on Monday. Well, if you're a professional trader, you're not going to do that. You don't buy into an increasing market. That trend for them is already over and they're going to wait. But for a lot of novices, they're going to hop on and try and ride the wave. The problem is, or in my case, the opportunity is, gaps always fill. There is almost never a time where a gap doesn't fill. Now, people will have issue with this and they'll say, yes, they do stay open, and yes, I agree. There are some, especially in the equities market, where gaps stay for years. And even in the Forex market, some stay for weeks. There's some that have been open for a couple of months even. But the majority of these gaps do close, and more than 75% of them close within the same day, and 99% of those close within the first 5 days. So they do close, and they can be played, and this will be proof positive that that can really happen, and you can make some money. So there are 7 trades here. The market went up and started coming back down. I figured this could be the turn. I went in for a loss here because I expected the gap to close all the way down to right around 127.30, and it didn't. I lost 59 pips here. I then reversed direction and gained 15 pips, but I had too many lots, so I gained a total of 30 pips here. When I started coming back down, I got out again, and I didn't re-enter because I wanted to see where things were going, and I'm glad I didn't, as you can see. Market continued upwards and then started to come back down. I didn't place any of these trades here until I knew that the market had committed to its downward trend and almost broke into the gap. So as you can see, I entered here too many lots with a target down here where the gap was going to be filled. And then what I did is I played it all the way down throughout the day. As I saw opportunity where MACD either went up and then started to turn back down again, I used that as an opportunity to short. I also used moving averages. As price action moved back to a moving average or they crossed, I'd enter short again. And there were very few situations where it went negative. This trade went a little bit negative here, but not by much. We'll see that it was only 30 pips, very, very little. This one was even less, maybe 5 or 10 pips. So they all went very well. Almost none of them went negative for very long. These two didn't go negative at all. So there was very little risk involved. And I rode these all the way down to here and got out all at the same time, just before the gap closed yesterday evening. Now what I'm going to do is put up a 5-minute chart. I'm going to clean up this mess to see if I can give you a little better picture of what it is that I saw on the 5-minute chart that made me go short a number of different times. And I'll also put up MACD to show you a little more about why I did what I did. Okay, so here's that 5-minute chart, and this is the beginning of the chart. Here's the gap where we closed on Friday and we opened on Monday, and you'll see this is where I started to go short. And I went short here because MACD on the 5-minute had started to turn down, but when we'll see here in a minute, I kind of went against one of my own little rules, which is I typically like to trade in the direction of the 1-hour MACD. I've used it for a long, long time, and it just seems to make good sense to kind of go along with that trend. Here I was trying to call the top of the gap trade, and I should know better, but then again, these can tend to move pretty quickly, so a lot of times this can happen where the first trade or two goes bad when you gap trade. this is kind of the cost of making some really strong trades on gap trading. I did go long here, mainly because I thought that it was going to have some upside. I didn't stay in it very long because I really wasn't sure where this was going to turn. And then when we scroll over here, you'll see I have more orange lines vertically. These are all the entry points. I'll move over to 1 hour. I didn't do any of this until MACD on the hourly turned down, and that would be right here. This is where the first trade was after MACD on the hourly had turned down. It did turn around on the hourly around the 200 EMA. I didn't short that high because this is a strong run-up, and we don't know how far it's going to go. A few weeks ago, this ran for a week and kept going up, so you never really know. When we go back down to the 5, we have the entry point originally up here. It ultimately did start to turn down. That's when the second entry was made. This was already in profit. We entered another trade here, and then I let things kind of trail back. I used this 21 EMA and this 8 EMA, let them cross and then cross back down before I entered yet again. And again here, you can see MACD turning down, and down here one more time we entered just to get a few more pips before the end of the day, as I saw that this thing was really going to finally get down to the point where it was going to close. But I went out about 10 pips before my target, which is the gap here. And look what happened. We hit the gap, and then we shot back up 80 pips. And then what happened? We went right back down again. So this oftentimes is a good play as well. As soon as the gap is filled, it's not a bad play to sometimes go the opposite direction. I didn't take that because obviously this was a long day, and I was obviously pretty happy with what had gone on. But again, this is not typical, and it just felt right to go a couple of mini lots in these first 2 trades. The other 3 trades are single mini lots. As I was saying, this isn't typical, but there wasn't a lot of risk involved here either, because once this really started to turn down, I knew the gap was going to fill. And when you know the gap is going to fill, then the only problem you have is sticking with the trade. Let me move down to a 1 minute chart and I'll show you what I mean. It can get a little scary when you see things, here's a 1 minute chart, moving against you. For instance, this trade here started going against me quite a bit. I think this is the one that went back on me about 30 pips or so. But again, you have to remember this is a retrace, and it went back up to the 200 EMA on the 1 minute chart, and it stayed with this trend the whole way down, and you can use that as a gauge. The key is to try and stay in and know that that gap is going to fill. The key here is to really let your moving averages and MACD and the trend itself just play out, because once they've committed, what I mean by committed is they've actually turned down, these MAs have turned down, and MACD has turned over. The histogram's gone negative. These are great indications that once that happens, there's a commitment here, and there's really nowhere else it's going to go but to fill that gap before it does anything else. And sure, it could have shot right back up and gone way past this high. I don't know, but the point is I knew the gap was going to get down and fill itself. I hope you guys got a lot out of this. I certainly did. It helped the fund out tremendously. We'll see if we can do some more. Thanks again.